This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial market. And today is a day where I do nothing. Why? Well, the condition was just simply not optimal for the way that I trade in my model. It just opened and it just left. So it's kind of hard to trade a market where it does nothing but just this, right? At least the way that I trade, because the way that I look at the market, the concepts that I trade, I'm looking for stop hunts and reversals. And a market that is just trending is not good for ICT concepts, if I'm being honest. A market that is good for ICT concepts is the one with stop hunts and reversals. Ones that just trend, that just go higher. Not really ideal. So let's get into it. What was I thinking going into today? So today I was confident in my read on price because I knew what I saw in the overnight session. It was clear to me that we had a manipulation in the overnight session, the London session, that should make the low of day. But I ended up establishing two ideas, a sell idea and a long idea, which is not something I should do. I should only come to the market looking for one idea with confidence in one idea, and that is it. But the draw on liquidity that I established was 50% of the impulse swing from the overnight session. Because if we look at my 15-minute annotations, on the 15-minute time frame, we see we have this impulse swing after the market has dropped down, cleared sell side liquidity. So we have taken out the stops underneath these lows, and we made an impulse swing higher when the daily chart is bullish, when the weekly chart is bullish. So what am I looking for after the market has done this? I want to see it rebalance the impulse swing that it's made in the overnight and pre-market session, offer buying opportunity, and find a way to get on side with the move. So obviously I'm looking for higher prices. When the market opens at the high of day, what I want to see is I want to see it drop down, rebalance that range, offer 50% of it, or offer a discount where it's fair value for me to be a buyer and look to get on side with the higher time frame narrative, because obviously we're at the all-time high and the market's going higher, so I'm looking to get on side with that. So I want to see the market trade down to 50% of that impulse swing and then look to be a buyer. So the higher time frame narrative that I established is Friday's close tells you the market is comfortable where it's at, and so does order flow from the overnight and pre-market session on both the hourly and the 4-hour. With FOMC coming up, the probability of this being a smaller range day is there, meaning price can fall back inside the range it's created overnight and pre-market. So obviously I'm looking at how the market's setting up in the overnight and pre-market session. This is what I do. This is how I approach the market. If we look at the hourly, we can see that, and these are the annotations that I put in on the chart in hindsight once the day is closed. Go back and review everything and put it in my daily price action log for study at some future point in time. When we see that the market drops down, we have this large down candle on the hourly, takes Asia sell side, and it trades into this 4-hour gap that we have right here. Let me get this off of the hourly, of the 4-hour, so we can see better. And this is simply 50% of the previous day range, which today is Monday, so the previous day range is Friday. Market does not even trade down to a discount of the previous day range, which shows us how strong and how bullish the market is. So it's kind of irrelevant. I'm going to get rid of that. But this is the all-time high, right? If we go up to the weekly, we can see that we have this old weekly high here, which was the all-time high that the market pretty much just left in the previous weekly range. We closed over that, so that's a sign of strength. And if we look at the daily time frame, giving us the same information, we have a close over this swing high, which indicates continuation 9 out of 10 times. Like for example, we don't see continuation below this low. Why? Because it leaves this larger discount wick. So that tells us that the damage is done down there. The market reverts for this high here. So we have a solid up close candle over this high. Note how the body of Friday's candle basically closes kind of like in the middle of that range, where the premium wick and the discount wick are equidistant. Whenever I get a close like this usually tells you the market is comfortable where it's at. It's not interested in going lower. It's not going to reverse, that's for sure. Because we had FOMC, I thought this candle was likely going to be a smaller range candle because I'm not expecting a large move in price before FOMC, which is why I created the sell idea that I had here. So if the market continued to trade higher right out the gate at 9:30, I was not interested in chasing it long at the open. I'd need to see it drop down to a discount of the impulse swing created from pre-market and overnight session. So this meant that if price opened at the high day and continued to trade higher and failed at the high day, I could try a counter trend short targeting 50% of that impulse swing created in the overnight and pre-market session, or half of the opening range gap for a high probability low hanging fruit objectives that are counter trend. So that would fit within the criteria of my bearish premium gap opening setup, where we have a premium gap opening like we do here, right? We gapped up from where we settled yesterday in regular trading hours. You see we have that gap, right? The market opened at the high of day. So typically when the higher time frame narrative is bearish and I can actually frame the idea of lower prices, the market sets up like this and we have smooth liquidity in the overnight session. What it'll do is it'll open at the high day, trade up, fail at the high day, and then break lower and fill this gap and attack the overnight session liquidity. Now, the reason that doesn't happen in this session is because the higher time frame narrative is obviously bullish, right? The market's at all-time highs. We're not interested in going lower at all. So based on the way that I trade, if this thing just kept going higher at 9:30, there was no way I was going to buy it because the market has already gone way too far into a premium, which is just how I've been taught to look at the market from the lens of ICT concepts. I studied the 2024 mentorship. Each time there was a session like this where it just slowly grinds higher at 9:30, he's not doing anything. He's sitting sideline. It's not a day that it's not a day that's worth trading. And it really, if you look at these conditions, is this a condition worth trading? I would say it's not, because if we look at the 15-minute time frame, we see a lot of overlap between the previous candle's range. If you look at this candle, completely overlaps this candle's range. If you look at the following, completely overlaps this candle's range. So the condition is high resistance. And besides the first two 15-minute candles that we had right at 9:30, the 9:30 candle and the 9:45 15-minute candle, the market basically was just a slow grind up for the remainder of that session. Now, it did settle on its high. We did have a larger range day, I guess you could say. But this is not a condition that I'm interested in trading at all, especially with FOMC coming up. My focus is primarily going to be after FOMC, so on Thursday and Friday of this week. If I'm trading before then, I'm going to be in and out of the market really fast, and it's got to be something of high probability. So the market was giving me absolutely no confirmation that I was going to break lower at the high day, because the second 15-minute range that we had literally opened with no discount wick and closed on its high. At that point in time, I know that the sell idea is absolutely not valid, but I was still sitting around trying to look to fade this thing, which made absolutely no sense. And I knew what I was doing. And eventually it got to the point where the price action was so slow and boring at 10 o'clock that I literally fell asleep, mouth open like this. It's a Monday. I spent some time with my girlfriend last night, so I went to bed at like 10:30, woke up at 6 o'clock. And I'm just always a little slow to start on Mondays. Today, the price action, in combination with that, I literally fell the fuck asleep. I mean, look at this. If you're trading today, you know how slow this condition was. And usually when the condition is extremely slow like this, I tend to lose focus. I tend to check out. And today, I literally fell asleep. That's how bad it was. So typically when the market sets up like this and I have a bearish higher time frame narrative, I can look to fade that. But in this case, I was not given any indication that this thing was interested in breaking lower. So I didn't take any shorts, which is good. That shows that I have a strong ability to know what my playbook looks like for that bearish premium gap opening where we have a gap fill and a reversal at the high day at 9:30. And I can avoid the instances where the criteria is there, but maybe the higher time frame narrative is not. So it's probably not going to play out. And I can be extremely patient and selective, waiting for the right confirmation in order for me to take that playbook. It was never there, so I never took it. And I was waiting for price to give me the right signatures, but it never did. So I put no risk on, and today is a nothing day, which is totally fine. Doing nothing today was the best move, in my opinion, for the way that I trade. That's just me personally. You know, there may be a lot of traders out there that capitalized on the move today, maybe held to the close and had a nice, solid winning trade. It's just not the way that I trade, you know? Everybody has their own way of trading. Me looking at the market today, the best move was definitely doing nothing. So at 9:50, I'm noting that the market is very bullish. All the higher time frame candles are likely to close on their high by 10 o'clock. It's just going to run and there's nothing for me to do. This is not an optimal condition for my model at all. All I really can do is stick around and try to fade it. Sure, it doesn't make sense based on the way that I trade because it's not in agreement with how I think the market should move, but it's doing what it's doing. So what I mean by this last sentence right here is this is not how I want to see price behave in order for it to agree with my model and the concepts that I trade and the way that I look at the market, because it just slowly grinds higher. So this is absolutely not a condition that I want to be trading at all. But I shouldn't try to make sense of that and try to fade it. Just accept it. Like, that's just what the market's doing. What are you going to do about it? Are you going to sit here and try to fight that and trade against it? Or are you just going to acknowledge that that is how the market is trading today? So it's not a good trading day today. So do nothing. And that's the mistake that I made last week, last Thursday and Friday. I was trying to make sense of the condition where we were kind of doing this, right? And I was just fading that. And that led to, well, I didn't take any damage done, even though I was trying to fade the clearly bullish condition at the all-time high. But still, I was sitting there trying to make sense of this. And because it didn't make sense to me, I did nothing but try to fade it. Now today, I'm acknowledging the fact that this is not trading in the way that's ideal for my model in the way that I trade. But I'm not going to fight against that. It is what it is. That's just how the market's moving right now. So what do? Do literally nothing. That's it. So it doesn't make sense based on the way that I trade because it's not in agreement with how I think the market should move, but it's doing what it's doing. So a huge step in maturity, leveling up from the mistakes that I made last week, because last week I tried to fight against this, right? This week, I'm acknowledging the condition and just accepting it. Perfect. Boom. That's a step forward right there. So I got better as a trader today without literally placing any risk on. And that's how it is. That's how it goes. You know, you could still have a good trading day without ever actually putting any risk on. And that's what happened today. So at 10 o'clock, I'm thinking now this condition is very slow and making me damn near fall asleep. The huge 9 o'clock and 6 o'clock candles in the higher time frame tells me there's nothing likely going to happen, maybe even the rest of the session. But here I am trying to fade it, looking for reversal. This sleepy price action is not good. So at 10:05, I'm basically falling asleep. If we look at the hourly, look how that 9 o'clock candle closes, right? Now we have absolutely left the previous weekly high. So in this case, there is no reason I should look to fade this thing after 9 o'clock. So in the 10 o'clock range, there's no reason I should be looking for buys or for sells. And I should probably do nothing because typically on Mondays like this, where the market has done so much in that first hourly candle, on that 9 o'clock candle, the rest of the session is literally just dead. It's kind of like a manual repricing, like they're just sticking the market higher. And then after they've done the primary move for the day, which happens in the first hourly candle, then it literally does nothing, which is what we see here. So my experience is keeping me out of conditions that are unfavorable. And that's kind of what I noted on what happened today. So what did I do right? My experience factor told me that this was a shit session, so I walked away fast. Good move. So I'm noting that the first hourly candle is a large up close candle. It's the 9 o'clock range. It's a Monday. It's before FOMC. And my experience tells me, I've seen this exact thing before, that the rest of the session is probably going to do something like this. So what do? I walk away at around 10:20, I think is when I walked away. So what did I do wrong? I still tried to fade this move, though I knew with absolute clarity that there's no way a reversal is coming based on higher time frame order flow. I was still sitting there trying to fade it, which didn't make any sense at all. Even though I knew how these higher time frame candles were going to close on the hourly before they actually did, because they were painting as bold face up close candles and it was not giving me indication that this thing should break lower and reverse. So I learned that when we have a retraction profile, where in the overnight session on the 15-minute time frame, when we have market retraction in the overnight session, basically the market is just trading in the opposite direction of the higher time frame narrative and removing liquidity from the marketplace. In this case, we're bullish on the higher time frame, on the daily, on the weekly. The market trades down, removes sell side from the marketplace, and then we have an impulse swing back inside the range. This typically produces those sessions where we have a move right at 9:30. Now, ideally, what the market would do if it opens at the high day and we have retraction is it drops to rebalance half of this range, and then we see the real move of the day. For example, if I show you other examples here, you're going to see that phenomenon happening. So let me see if I can pull up an example of that real quick. Like, for example, here, right? We have protraction in the overnight session, removes liquidity underneath previous daily low. In this case, impulse swing back inside the range. We open at the high day, but what does the market do? It trades down, rebalances the impulse swing, trades into this gap made in the impulse swing, and then it trades higher. So ideally, that's what I'm looking for. It didn't deliver that today. It just left right at 9:30, which is not something that I'm interested in trading at all. In this case, we kind of have the same thing, except the protraction happens in the pre-market session, and a high impact news driver pushes it back inside the range. But still, what do? We open at the high day. It looks like the first thing that price does is trades up first, but then it rebalances the impulse swing. So if the market leaves at 9:30 and just keeps trading higher, there's no way that I'm chasing that. I'm not chasing that in any kind of situation ever. I need to wait for price to rebalance that impulse swing, offer a discount where it's fair value for me to be a buyer, and then I can look to buy it. So there's another example of that. I think. See, in this case, we have protraction, drops down, removes sell side below this low, impulse swing. In this case, we begin to rebalance that before 9:30, so 9:30 doesn't open at the high day, but it drops and offers a deep discount of the impulse swing before it makes the real move. So it's that similar thing that I'm kind of looking for. In this case, we just leave at 9:30. What am I doing? Nothing. Literally nothing. And that's totally fine. So my bias, I was looking for an up close day, but not in this fashion. How price just leaves at 9:30 is not ideal. Was my draw on liquidity correct? No, because price never even attempted to reach half the range. It just went. So what actually happened? Price just left right at 9:30, which is typical of Mondays with protraction profile. So what I plan to do versus how I executed on that, I plan to be a buyer if price rebalanced half that impulse swing, or a seller if it continued to trade up and failed at the high day. How did I execute on it? It never offered either, so I did nothing. I executed on that idea perfectly by not executing it. Boom, that's the main takeaway from today. I had the maturity to do nothing because price did not present what I was looking for that day, and how it actually ended up delivering made no sense for me to do anything at all. So what do? Nothing. And so what did I miss? I missed nothing because there's nothing for me to do at all, and I got nothing, which I'm not upset about at all. And here's my post-market annotations where I'm just noting the main takeaways that I think are salient as to why the market delivered the way that I did today. And then I'm just putting that in my daily price action log, which I already showed you guys. So this is basically doubling as a daily price action log and kind of like a back testing log. I'm recording all my sessions in here, which is allowing me to really understand my model, the way that I trade, the way that I read price, higher time frame narrative, everything. And if I just do these processes on a day-to-day basis, I literally get better by default without even trying. So that is going to be it for this one. It's going to be a quick one because I did nothing today. So there's not much to talk about, right? But my primary focus is going to be after FOMC. So my focus is going to be Thursday and Friday, when the development of the weekly range should be extremely clear to us after FOMC is out of the way. Maybe I can get something on tomorrow that is just like a small win. We have 8:30 core retail sales, so I'm waiting for that. But post 9:30 is probably going to be rough because we have FOMC the following day. But regardless, we're still up on the eval. And all I need is a few swings to put me at that 3K profit target, right? And that's it. Now, in between the days that do offer the swings, I have to minimize my drawdown and prevent myself from making mistakes. And I did a really good job at that today. So all in all, it's looking pretty solid so far. Nothing bad to say for this week so far. And I'm going to show up the following day, and I'm just going to keep doing the same thing. And that's it. So one more thing before this video is over. I have all my processes and systems integrated into TradeZella, and if you're interested in using this software, there is a link in my description or in my bio, and if you use that, you can help me out, help the channel out, and you can also use code, CF25 from Chart Fanatics. It's not my code personally, but if you do use the link, if you click on that link and sign up through there, then you do help support the channel, so I'd really appreciate that. But aside from that, it's going to be it for this one, and I'll talk to you tomorrow.